The video you're about to watch is one of the about 10 meetings we had to learn more about health insurance and the choices and the other insurance policies that will be coming up in November. So I hope you take the time to watch it. I hope you can learn a lot. Again, there's a video to watch, and the PowerPoint will be available, also a link for that. So please make sure you take time to watch this and pay attention to it, because you'll have some very important decisions to make. Thank you.
Okay, as Mr. Husfeldt said, we have a lot of changes that we want to talk to you about today, and that's where we'll spend the majority of the presentation discussing the new health plans, the two new health plans that we're going to be rolling out. Our goal today is just to provide you with the information so you can make an informed decision when you do your open enrollment, which we'll talk about those dates and times in just a minute. We are moving from the good news is we're staying with Blue Cross Blue Shield of Florida. There's no change there. As Mr. Husfeldt said, if you want to keep the medical plan that you have today, you can absolutely do that and not have to do anything at all, okay? The big thing that we have been working on with the school district is that we are moving from a fully insured platform to a partially self-funded platform. What does that mean to you as far as your premiums and things are concerned? Not a thing. The school district is going to continue to contribute the same thing that they did this year to your plan in 2016, and you're going to have the same contributions if you make no changes on your medical plan in 2016 that you have currently. So that's great news. Not to have an increase in today's medical world is phenomenal. But what this will do for the district long term, which will ultimately impact you all, is that this now becomes 100% transparent when we negotiate renewals with Florida Blue. We're going to know where every single dollar goes for claims experience on your medical insurance, on your pharmacy cost, on your administrative cost, where on a fully insured plan, you really don't get to see the full picture. So that's a good thing for a group of your size. You have been running exceptionally well with your claims experience over the last 5-6 years. You've had very good claims experience, so you make a very good candidate to move to a partially self-funded plan. Ultimately, our goal again will try to lower our deductibles, keep our co-insurances competitive in the marketplace, maybe improve our co-payments in different areas than we have today. We're gonna continue to use Blue Cross Blue Shield of Florida, or Florida Blue is what they're called today. That is without a doubt the best network, best carrier in Bay County. So we have you with the right company. We want to roll out a comprehensive wellness and medical plan. Those two things go hand in hand. If you have a healthier lifestyle, or doing the right things, or educated about the things that you can do, that's going to control healthcare cost. At the end of the day, we all have a part in where our premiums go. Every single person in this room, your dependents. So you want to make sure that you're using your health plan the most efficient, effective way possible to keep healthcare costs down. Because if we don't, then the school district can absorb some of the costs, but ultimately they're going to have to pass on you. So again, we're going to talk to you about some things today that can help you stretch your healthcare dollar. Again, we are offering 4 medical plans. Right now you're on what's called the Blue Choice network, which is Blue Cross's traditional PPO plan. That's their largest network in the state of Florida. That's the plan that you guys have had here for 10 years with no plan changes, right? Those two plans will stay in place. It's the 317 and the 117. We're going to be offering a new low-cost copay plan through Blue Options, which is Blue Cross's. It's really not even, it's been around for about 10 years, but it's their, one of their more newer networks. It's not the same network that you have today. The hospital systems are the same, but there are doctors that are in the Blue Choice network that are not in the Blue Options network. So when you're looking at this and evaluating what plan you're going to enroll in, make sure that your doctor is in the new plan, okay? It's not many doctors that aren't in, but there are a few that may not be in place. We're going to spend a lot of time today talking about a high deductible health plan and health savings account. How many people have heard of a health savings account? Quite a few. I'm a huge advocate of the health savings account plan. I think it's a good fit, not just for the healthy people, but people maybe that have ongoing medical conditions or take certain medications, this could be the right plan. So keep an open mind when we talk about this, because you're going to see larger deductibles than you've ever seen before. But what we're going to ask you to do when you leave here today, just like you do with your students, those that you're instructing, you're going to have some homework to do. It just isn't going to be point and click, this is the right plan for me, because you're going to have 4 plans to look at, and you want to make sure that you choose the plan that's best for you individually and or your family. We're going to use a company called HSA Bank as our custodian bank. They'll be the one that will manage your health savings account for you and provide you with the proper tax documents, provide you with a debit card that you can use when you're out there and you're receiving care through a provider or through a pharmacy. We'll also spend some time today on your flexible spending account and your dependent care spending account. Dental, we have a new dental carrier this year. It's going to be Delta Dental. We've made some improvements on the plan, which I'll talk about later in the presentation. We'll continue to have a high option plan, and we'll have a low option plan. You can see one of the benefits is cleanings now will be covered at 100% instead of 80-20. That's a nice improvement. Vision is going to remain with Humana. No changes there. No changes in plan or cost. We're changing life insurance companies. We're going to be moving from Lincoln Financial Group over to MetLife. One of the new features to the optional life plan is that right now you can only elect life insurance for yourself in addition to what the school district provides, right? It's only important. Now you'll be able to enroll your spouse and or your children if you want to put life insurance in place for them as well. So that's a new benefit. We're going to talk to you today about some worksite products that will be offered through Allstate, group accident, group critical illness, group cancer, and hospital indemnity. These products pay above and beyond what your medical plan pays. These are supplemental plans. It pays directly to you. Okay, so as an example, the group cancer policy. You know, if you get diagnosed or someone gets diagnosed with cancer, you may want to go over to MD Anderson to be treated, correct? Well, your medical plan will pay for the services at MD Anderson that they provide, but they pay nothing for your travel expenses or your hotel stays or your meals and things of that nature. This product supplements what your medical plan would pay. Okay, so it's totally employee paid, voluntary for you to choose. It may not be the right plan for you, but it is available to all employees and their dependents. Okay, so let's get into the medical plan. So here's 10 ways that you can stretch your health care dollars. Some of these are going to be, you know, pretty standard. You're aware of it, but let's just walk through them together. Most importantly, you need to know how your health care plan works, right? How much does it cost me when I go to an ambulatory? Do you think, let me ask this question, is it more expensive to go to the hospital or is it more expensive to go to an ambulatory surgical center? Ambulatory surgical center, right? Without a doubt. It's amazing if you would compare the cost of how different it is. Now, one of us will go on a trip where we're going to fly somewhere, right? And we just automatically go to Delta and say, whatever their price is, we're going to pay it because we like Delta. We always usually go to Expedia or one of these websites and see what the best flight is, right? We're shopping, we're comparing. You need to do the same thing with your health care dollars to a certain extent. You always want to use in-network providers. And it's pretty hard to find a provider in this town that does not accept Blue Cross Blue Shield. I mean, it is the largest network by far. Use freestanding surgical and diagnostic centers. Ask your doctor about home testing or monitoring devices. Use the emergency room for emergencies only. If you've ever experienced an emergency room visit, it's not fun. You sit in there for 4 or 5 hours. And why? Because the emergency room is usually, you know, there's a lot of people there that shouldn't be there. Carefully check all your medical bills. You know, anytime you have human, you know, data entry, they could put in a wrong diagnosis code, and you could receive a bill that you really don't owe that amount, and they've coded it incorrectly. How many of you have signed up for My Blue Service through Blue Cross? One person in the whole room? 2 people. Okay, next year when we have this meeting, everybody, I want you to raise your hand that you've signed up for My Blue Service. This is how you monitor your health care cost. You can go to My Blue Service, you can sign up. It tells you exactly what you've spent on medical care, RX care. You can track all of your medical expenses and know exactly what your outlay is. You can look up your doctors. I mean, it is a great, great website and tool. Make careful decisions about your RX. I know you've probably heard it time and time again. Brand name medications are certainly more expensive than the generic. And the brand name medications, they have a certain time period for their research and development to get their money back on what they spent to put that medication out. And then the generic, so now another company can produce that same drug. Well, the FDA is not going to approve a generic medication if the active ingredients is not exactly the same as the brand name medication. Okay? I'm not saying never to take brand name. What I'm saying is ask your doctor about it, because you could lower your out-of-pocket expense significantly and help overall the health care plan. Take advantage, whether you have a FSA, HSA, make sure that you take advantage of it if you know that you're going to have medical expenses. This is one of the few times that the IRS says, hey, we're going to let you pre-tax some money, go into an account, use it to pay your medical expenses, and if you use it for qualified expenses, you never pay taxes on that money. I mean, it's, you know, one of the few times that you have the IRS give you an advantage where they don't take a piece of it, right? Okay, so let's compare the two plans that you currently offered, that are offered to you today. Under the 317 plan, which is the most popular product, you have a $500 individual deductible and you have a $1,500 aggregate deductible for family. So what that means, if you cover you and your spouse, you have a $500, your spouse has $500. If you have you, your spouse, and 2 children, once the family hits $1,500 as an aggregate, your deductible's been satisfied. After your deductible, Blue Cross Blue Shield pays 80%, you pay 20% coinsurance, up to $2,000 out of pocket for an individual and $6,000 for a family. Now, down below that in red, this is going to be important as we get into new plans, your out-of-pocket max does not include your deductible or your co-payments. So if you have a bad year, medically things come up, you could spend as an individual $2,500, okay, on the out-of-pocket. There's no per admission deductible under the 317 plan. There's no emergency room deductible under the 317 plan. Now slide over to the 117 plan and you can see everything stays the same except when you get down to the bottom, if you go into the hospital under the 117 plan, you got to pay a $200 copayment in addition to your deductible and your coinsurance. Anyone in the room on the 117 plan? Nobody? Okay. If you go to the emergency room, it's $50 copayment in addition to your deductible and coinsurance. Under the 317 plan, you have a $20 copayment for family physicians. So general practice, family practice, internal medicine, pediatrics, when you go there, you pay a $20 copay and that's all you pay. If you're on the 117 plan, you have to pay deductible and coinsurance. You can see why the 317 is the better choice because the premium is exactly the same for both plans. So if you're on the 117 and you just didn't want to raise your hand, move over to the 317 this year, okay? Specialist copayment, deductible, and coinsurance on both plans, inpatient hospitalization, deductible coinsurance. On the 117, you have a $200 copay. In addition to that, keep in mind that $200 per admission deductible, that's on top of your $2,500. So again, you could get up to $2,700, $2,900, depending on how many times you were going to the hospital. Ambulatory surgical, deductible and coinsurance. And then down on the bottom of the red, you know, DED is deductible, PAD is per admission deductible. Moving on, emergency room, again, deductible coinsurance. Urgent care is a $20 copay under the 317 plan. And under the 117, it's deductible and coinsurance. Advanced imaging, the same. Diagnostic lab. Use Quest, deductibles waived under the 317, it's just 20% cost. Under the 117, you have to pay your deductible plus your coinsurance. Diagnostic x-ray, deductible and coinsurance under both plans. Pharmacy plan, this is a very, very rich pharmacy benefit. So this is how it works, and you guys know about it as probably as well as I do. If you go to a retail, 31-day supply, you have to pay your deductible and your coinsurance, okay, for retail. If you take and you use the mail order program, there's no deductible, 93-day supply, and if it's a generic medication, you pay $14, and if it's a brand name medication, you pay $28. Sound right? Now those co-payments, the 14 and the 28, they do not count towards your out-of-pocket max. That's on top of, okay? And it's important. The reason why I keep saying that, because we talk about the new plans, everything counts towards your out-of-pocket expense. So you need to keep that in mind when you're looking at it. The wellness benefit, under the 317 plan, mammograms are covered at 100%, colonoscopies, deductible and co-insurance apply. All other covered wellness is $20 copay if you have it done at your family doctor, and then deductible and co-insurance for specialists. Under the 117, mammograms are covered at 100%, colonoscopies, deductible, co-insurance. All other wellness services not covered. And the reason why is because these are grandfathered plans, so they do not have to be ACA compliant as long as they stay grandfathered. Okay, now we're going to talk about the new plans. And what I'm going to do is first I'm going to talk and walk through the high deductible health plan, which is the 5192, 5193. I'm going to walk through that first, and then I'll come back and I'll go through the 3900 plan. Okay, so HDHP means high deductible health plan. These were introduced in 2003 by George Bush, signed them into law. They became very popular. 2005 they started taking off. Well, now we have probably somewhere in the neighborhood of 20 million people that are now enrolled in a high deductible health plan in the United States. So it's becoming very, very popular. The way this works is your deductible for an individual is $2,500. Okay? The law says, this is not Florida Blue, this is not Fisher Brown, this is the way that IRS designed it, is if you're enrolled in this plan, no expenses can be paid by the carrier until your deductible has been satisfied. So if you're an individual, you have to spend $2,500 before Florida Blue pays a nickel. Okay? So if you go to the pharmacy and the medication cost is $50, you pay the $50, that counts towards your deductible. You go to the hospital, the bill's $10,000, you pay the first $2,500, your deductible's been satisfied. Once your deductible's been satisfied, the co-insurance goes to the same split that you have on your current plans, 80-20. Florida Blue pays 80, you pay 20%, to an out-of-pocket maximum of $5,800 for a single person. And then if you jump back up to the deductible, the $5,000 deductible for family, this is how it works. It's different than it is on the other plans. With the high deductible plan, the family has a $5,000 deductible. So if I cover myself, my spouse, and my 2 daughters, then the whole $5,000 could be on me in the first month. Well, now my family deductible has been satisfied. Does that make sense? So it's what's called an embedded deductible. Then it goes to the 80-20, and then the out-of-pocket max of $11,600. So you're probably already thinking to yourself, Mike, why in the world would we enroll in this plan when the deductible is 4 times greater, 5 times greater than our current plan, right? Is that what you're thinking to yourself? I would be too. Well, if you enroll in this plan, it's 0 premium for a single person, okay? 0 cost. Nothing comes out of your check. And I'm going to talk more about that in just a moment. And we're going to show you the premium slides. In addition to that, you're going to be able to open up what's called a health savings account if you're eligible to do so. The school district is going to make a contribution to that health savings account. And that's what you're going to use to help fund your health care expenses. Okay, so that's how this plan works. So it'll start making a lot more sense as we get further down into the presentation. So again, everything, office visits, inpatient hospitalization, ambulatory surgical, you have to meet your deductible, then it goes to the 20%, and then your co-insurance. Keep this in mind. When you go to an in-network provider, you're always going to pay the negotiated fee that Blue Cross has negotiated for that provider's services. So if you go to your family physician and their charged amount is $100, but Blue Cross has negotiated a $50 rate, you're going to pay $50. Okay, so you always get the advantage of the Blue Cross negotiated price. Emergency room, deductible and co-insurance, urgent care, advanced imaging, diagnostic lab. Again, if you use Quest, once your deductible has been satisfied, it goes to 100%. diagnostic x-ray, deductible, and coinsurance. So after your deductible's been met, remember everything has to go towards that first. Pharmacy costs, physicians, everything. Once your deductible's been met, now you have co-payments for this plan. Generic is $10 copayment, so when you go get a generic copay on a retail pharmacy, remember on your 317 plan, if you use retail, you have to pay deductible and coinsurance, right? Mail order, you have a $14, $28 copay. If you use retail on this plan, once your deductible's been met, it's $10 for generic, $30 for brand, and $50 for non-preferred. All those copayments accumulate to your out-of-pocket expense. Mail order under this plan, Prime is the company we use. Generic is $25. On the preferred brand name, $75. And on the third tier, non-preferred brand, $125. So that's your mail order. It's 2.5 times the copayment of retail. So it's a little bit different. Wellness. Because these plans are ACA compliant, Affordable Care compliant, all your wellness services are covered at 100%. Everything. Mammograms, well woman exams, colonoscopies, well child care. Anything that is diagnosed as a wellness visit because of the ACA rules will be paid at 100% by the plan. No out-of-pocket expense to you. Let me kind of stress this. It's important that when you go to see your doctor for a wellness visit, that's what you're going to see your doctor for. If you have something going on with your knee or your stomach's not right, do not go see your doctor on the same day for that as you're doing your wellness, because they're going to bill it as the patient came in with a diagnosis. And then you're going to have out-of-pocket expense. So it's important that you do your wellness visit strictly as wellness only. Health savings accounts, here's how they work. There's really two components to it. You have your health insurance plan. Anyone in this room can enroll in the high deductible health plan. There's no limitation on who can enroll in the health insurance plan. Then you have the second component, which is the health savings account. Not everyone is going to be eligible to receive or make contributions to the health savings account. And it's not our rules. Again, it's the IRS code that we have to comply with. So the health insurance plan we've talked about, we know what the deductibles are, we know what the out-of-pocket expense is. On the health savings account, in 2016, you're going to be eligible to put up to $3,350 into your health savings account. If you're a family, if you cover a spouse or one dependent, you're going to be eligible to put in $6,750. The school board is going to make a monthly contribution to your health savings account if you're enrolled in this plan. We will have that number out to you all before the open enrollment meeting, or the site opens November the 2nd. Okay, that'll be determined in very short order. But the good news to that is that when the school district gives you the money month one, that money is 100% vested. It's yours. You will own the account and you will own the money that's in the account. With the school district on your retirement plan, you all have what's called a 403B, right? That's what you can put your retirement dollars into. When you retire and you decide you want to take distributions from that account, to pay your expenses, do you have to pay taxes on that money? Without a doubt you do. Somewhere down the line, the IRS always gets their paws on it and takes their piece of the pie, if you will. Under the health savings account, you have what's called a triple tax advantage, and it's the next slide. Your money that comes out of your check goes in tax-free, okay, pre-tax. It goes into an interest-bearing account and it grows tax-free. And as long as you take that money out for qualified expenses, you do not pay taxes on it. Okay? So it's the only dollar that you'll ever make where Uncle Sam does not take taxes out on it, as long as you use it for qualified eligible expenses. The HSA funds, day one, belong to you. Okay? If you, for whatever reason, separate from the school district, you take that account with you and you take the funds and the balance that's left in there. The money that's in the account through HSA Bank, they're going to provide you with, if you need 2 debit cards. They'll give you 2 debit cards for you and your family to use while you're when you receive care. So if you go to the doctor's office for an office visit and you're enrolled in this plan and you have $500 built up in your HSA account and that office visit is $50, you simply swipe your HSA card, takes the $50 out of that HSA account, notifies Blue Cross Blue Shield that you've had a $50 hit against your deductible. Everything's automated, okay? So it helps you keep up with your receipts, where your expenses are, and so forth. Now, you can't go to Walmart or CVS and throw the Coca-Colas and the chips and whatever up there, and there's your prescription, and swipe your card because it's going to kick it out and say it's an ineligible expense. That's a good thing because it'll protect you from getting dinged on, you know, taking money out for an ineligible and have a tax consequence. So you and the school district contribute money into this account pre-tax, and I would encourage you, if you can, to do it through payroll. And the reason why is because you'll save on the FICA, the 7.65. So here's why it's important to participate in the FSA or the HSA, regardless of the plan you choose. On average, you're going to save about 25% of every dollar if you do it through a pre-tax benefit. So for every $1,000 that you put away pre-tax, you're going to spend $750 to get $1,000. Make sense? Okay, so if you put in $2,000, you're spending $1,500 to get $2,000 in benefits. So that's the way you need to look at it. It's a big tax advantage for this plan. And the great thing about this plan versus an FSA, what's the biggest downside to an FSA? Anybody want to take a shot at it? You got it. With the HSA plan, it rolls over with no ceiling. So it's a medical annuity. It just builds and builds and builds and builds. Okay, so if you're a healthy person and you don't have a lot of medical expenses, right now, and I'm going to show you in just a moment, right now you're spending $720 a year on your health insurance plan, right? That's what's coming out if you're an instructor. Okay, I know there are different costs, but as an instructor, you spend $720 a year. Let's say you're pretty healthy. You go to the doctor once a year. You take a generic drug. You don't have really anything going on. Why not take that $720, redirect it into an HSA account, and use that money to pay for your expenses as they come up? You know, and take advantage of what the school district's going to also put in there for you, and you're building up, you know, your HSA account in the future. When something does occur, you'll have that money there to use to pay for those medical expenses. Once you meet your deductible and your co-insurance and things are met, all the plans go to 100%. So your worst case scenario, if you stay in network on the HSA plan as a single person, is $5,800. Once you spend $5,800, if you have a $100,000 medical bill, you spend $5,800, you're done. All your medications, all your co-pays, all your outpatient care, paid at 100%. Okay, I mentioned not everyone can enroll in or have a health savings account. You have to be covered by a high deductible health plan. You cannot be enrolled in Medicare. You cannot be on another health insurance plan, like you can't be covered through your spouse, TRICARE, Medicaid, anything like that. That would kick you out, and you cannot be not on another person's dependent as far as claiming as a dependent on a tax document. Other health insurance doesn't include specific disease, illness, accident, disability, dental, or vision. So that wouldn't kick you out, just other medical insurance. Here's some of the expenses that you can use for the HSA plan. Doctor, hospital visits, you can use it for dental care, vision, prescription meds, premiums for long-term care insurance, COBRA premiums, and premiums for individuals over 65. So one of the questions that we get is we say, well, what happens if when I retire and I'm no longer on this plan, or I go to another plan and I'm not on the high deductible health plan? What happens to that money? You keep that money in that account. You can spend it all the way down to a zero balance. As long as you use it for qualified expenses, you never pay taxes on it. You can use this money also, even if you have dependents that are not on your plan. If they're your eligible dependent, you can use your HSA funds to pay for their medical expenses or their dental expenses or their vision expenses if they're an eligible dependent. So a lot of flexibility. Over 65, if you take the money out, okay, for ineligible expense before 65, you're going to pay a 20% penalty plus normal taxes. The government's not going to let you put it away pre-tax and then decide you want to go to Disney World and use that money and not have to pay a penalty. You can't do it on your 403B or a 401K or any type of investment vehicle. You're not allowed to do it on this. Now, once you hit 65 and you want to cash out, you can do that. 20% penalty goes away, but you'd still pay normal taxes. Record keeping, we selected the leader as far as custodian banks and HSA Bank. They'll do all the record keeping for you as long as you use your debit card. If you don't use your debit card, ultimately you're responsible if you do get audited. So just make sure you maintain your records just like you do for your FSA plan. Your flexible spending account. Those that you are on the flexible spending account, you know that this runs July through June. So here's how it works. You cannot have an FSA and an HSA together. So if you have an FSA today and you want to enroll in this plan January 1st, then you're going to stop your contributions on this plan at the end of this year, and you'll start with the health savings account. Now the difference between the HSA and the FSA is that with the FSA, if you say, I want to have $1,000 go in there this year, first day of the FSA plan year, you have access to $1,000, right? Even though they haven't taken it out of your check. With the HSA, it's real time. It's whatever's in your account you have access to. Okay, so if you've already blown through $1,000, right, and the school district has not captured that back through a payroll deduction, they'll continue to take that payroll deduction until $1,000 has been met. Fair is fair. And then what will happen January 1 is we'll also have what's called a limited purpose FSA for those people that want to enroll in that and have an HSA in addition to it, but you can only use the limited purpose FSA for dental and vision benefits only. You cannot use that money towards your medical plan. Okay, the IRS will not allow it. FSA spending account rules, you have co-pays, deductibles can be reimbursed. The IRS allows up to $500 of unused funds to be carried over year to year, so you can roll that over. And we've also have an extension, so you can go all the way to September 30th on your FSA to file claims, so you have some time period so you don't lose that money because of the use it or lose it rule that the gentleman mentioned in the back. And again, we talked about the HSA and FSA. You can't have both options. Here are the differences between the two. You must be enrolled in a high deductible health plan to open an HSA. HSA rolls over from year to year. That's the biggest benefit without a doubt. The employee owns the account. You can only use the funds available in the HSA account. FSA will reimburse eligible expenses, anticipated contributions for the year. And then we talked about the use it or lose it rule. If you elect an HSA and are currently enrolled, we've kind of talked about these already, so I won't rehash it. The school board also offers a dependent child care account. This is really just money in, money out, but if you have dependent child care needs, please use this program. It's pre-taxed. You know, you're saving that money. Just make sure that you know whatever you put away you're going to spend on dependent child care. Because, again, it's just a tax savings vehicle for you. So before I go to the voluntary benefits, let me back up and I want to talk to you about the fourth plan. Okay, so the 3990 plan is just a straight PPO product, low-cost option. It does not have a health savings account attached to it, so if you enroll in this plan, you'd want to enroll in a flexible spending account. If you keep the plan that you have today, take advantage of the flexible spending account. I mean, don't miss that opportunity. Your deductible under this plan is $2,000 per person, so it doesn't matter how many people are on the plan. If you have 5 people, everybody's got $2,000. Co-insurance is 70% paid by Blue Cross, 30% by the insured, $63.50 out of pocket, and $12.7 out of pocket for family. On this plan, you do have a co-payment for your family doctor at $35 and $50 for a specialist. So you don't have that $50 copay now under the 317 plan. If you go in for an inpatient hospitalization, if you go over to Sacred Heart and you have a $50,000 hospital bill, you're going to pay $1,500. The hospital bill goes away. Now, for the physician fees that are associated with that hospital visit, your deductible and coinsurance would apply there. But the hospital bill itself, all you have is a $1,500 copay. Keep in mind, every copay that we talk about on this plan, from pharmacy to office visits, all track towards your out-of-pocket expense. Once the $6,350 have been satisfied, all your expenses are paid at 100%. Ambulatory surgical is deductible coinsurance. Outpatient is $300. Emergency room deductible coinsurance. Urgent care deductible coinsurance. Advanced imaging at a freestanding clinic, so not a test done at a hospital. So if you have an MRI, CT scan, nuclear scan, advanced imaging would have just a $200 copay, and then your physician fees would apply on that. Diagnostic lab, $0. So if you use Quest, there's no cost to you to go to Quest on this plan. Diagnostic x-rays, deductible coinsurance. On this plan, I want you to note, so make sure this plan is not designed for somebody that takes brand name medications. You have a $10 copayment for generic medications only. If you have brand name medications, there's no coverage at all, regardless if there's not a generic available or not. So again, this plan is designed really more for someone that's healthy and they're just trying to protect themselves from a catastrophic event. Wellness, again, 100% on this plan. Okay, voluntary benefits. These are benefits that the employee pays 100% of the cost for. Okay, when I say voluntary, you know these are employee paid. Again, we're changing to Delta Dental. They have a very good network here of dentists that you can go to. This is what's called a passive PPO. So you have in-network benefits and out-of-network benefits, and the percentages are the same. But just like with your Blue Cross medical plan, if you go to an out-of-network provider, what can happen to you? You can be balance billed, right? Same thing works on the dental plan. What we've changed here and highlighted in red, now instead of a $1,000 annual max, you have a $1,500 annual max. So we've increased it by $500. Your preventative care is covered at 100% instead of 80-20. Basic services are still 80-20. Major services, crowns, implants, dentures, things of that nature are 50-50. Your deductible of $50 per person or $150 family apply to tiers 2 and 3. And now you have a $500 orthodontia benefit. It used to be for children only. Now it covers all family members, so adults and children can have ortho services up to $500 a year. You have the low-cost option as well. $1,000 max benefit, 80 for preventative, 60% and 60% for basic and oral surgery, and the deductible applies the same under this plan. Both of these, the dental rates on the high option plan went up just slightly, about maybe a couple of bucks a pay period, and I'll show you those in just a moment. Humana Vision. If you have any vision needs at all, take advantage of the vision plan. I mean, this is by far probably the best deal that we talk about. $10 for the eye exam, $15 for materials. You get eligible every 12 months. Instead of the lenses, you can get contact lenses and up to $105 benefit. You can't do both, though. The premium on this for a single person is like $562. It's pretty cheap. You can't go and get an eye exam for less than $120, $30 now. I think I wear I had LASIK, so I'm not sure any longer. Does that sound about right? About $100 for an exam? Okay, so MetLife voluntary benefits. Again, the school district gives you $50,000, right? 100% paid. You're eligible to enroll from $10,000 to $150,000. So if you have life insurance today through Lincoln that you pay for, right? When you go into the enrollment system this year, you can get an additional $10,000, no questions asked, okay, up to $150,000. So what I mean by that is if you have $50,000, you can enroll for another 10 and get yourself to 60 with no medical questions. If you don't enroll during this time and you want to, when you come in March or February or April and say, hey, I want to get some more life insurance, you'd have to go through evidence of insurability. They're going to require you to do a medical statement. Now you can get all the way up to $150,000, but anything above that $10,000, they're going to ask for medical underwriting. Even if you want to go through that and you were declined, you'd still get the $10,000. They're not going to not give you the 10. The $10,000 is automatic if you want to enroll in it and pay for it. Spouse could get $20K, not to exceed 50% of the employee's benefits. So what that means is if you have $20,000 of life insurance, your spouse is only eligible for 10. And then dependent children, you get $10,000K guarantee issue. With MetLife's policy, we get a couple of cool features I think that are good value adds. You get an employee assistance program. You get 3 consultations per incident, per individual, per year. Toll-free, 24 hours a day, 7 days a week. No payments for services, so it's free benefit for you. So if you've lost a loved one, financial advice, whatever it may be, that's what employee assistance programs help folks with. Travel assistance and identity theft solutions. These are all available to you at no cost. So if you're traveling and you're out of the country and you forgot your medicine, you can call these folks up. They'll facilitate your pharmacy to get the medication shipped to you wherever you are. That's an example. If you've lost your luggage, you can give them a call and they'll help you, get things that you need while you're out of town. Identity theft, if you get your identity stolen, you give them a call and they help get your creditors and everything situated. That's one of the fastest growing crimes right now in the United States is identity theft. Will preparation and estate planning. When someone loses a loved one, you don't know what to do at that point. You give these folks a call and they help you, manage that and get where you need to be. So again, some good value adds at no cost. We're going to be offering a group long-term disability for the first time at the school district on a group basis. I know that you've had access to disability insurance through several different vendors over the years. Horace Mann, I know a lot of folks have them. If you have Horace Mann, you can keep them. They'll continue to payroll deduct it. If you have other vendors that you're using on the disability side, you can maintain that plan, but if it's not Horace Mann, they're going to begin direct billing you for their services rather than doing it through a payroll deduction. Okay, does that make sense with everybody? So if you have disability insurance with a carrier other than Horace Mann, then you're just going to start getting direct billed from them versus doing it through a payroll deduction. It's more maybe an inconvenience, but it doesn't affect your policy at all, because with disability insurance, you always want to pay with that with after-tax dollars. So when you receive your benefit's not taxed, right? With this policy, through the standard, you'll get 60% of your income up to $5,000. It's guarantee issue, no medical questions asked. Okay? Now, it does have a pre-existing condition clause on there where they're going to look 3 months back, and you've got to be on the plan for 12 months before they'll pay for a pre-existing condition. All late applicants have a statement of health to complete. You've got 2 benefit waiting periods to choose from, a 90-day and a 180-day. So just depending on your financial situation, what that means is you have to be disabled for 90 days before the policy kicks in, or 180 days before the policy kicks in. 24-month own occupation or Social Security normal retirement if you're totally disabled. For this plan to work and for it to be effective January 1, we have to have 20% participation in the plan. If we do not get 20% participation, the policy is not going to go into effect. So we've got to get about 450 people to enroll in it. I'm not saying we're not going to get it, but if you have disability insurance, do not cancel it until we know we've got this firmed up, okay? Your income, I don't want to be up here and I don't want to be salesy. My job is just to give you the information. But, you're going to need disability insurance probably more so than you need life insurance. I'm not saying life insurance is important, but protecting your income is the most important thing you can do if you're in the workforce. Allstate benefits. again, these are products that they supplement your medical plan, they supplement your dental plan, whatever it may be. These, if you enroll in one of the products that we're about to talk about, these products are paid directly to you on top of what your medical plan pays. Benefits do not reduce at any age. Benefits are not taxed. And you have wellness components that they'll pay you a co-payment if you go and have wellness done on both the critical illness and the cancer policy. The group accident policy protects against accidental injury off the job. Over 30 benefits payable for accident treatment. If we had them up here, we would be here for 2 hours, so we're just kind of giving you the abbreviated version. Unlimited number of accidents off the job only. You have workers' comp to cover you for on-the-job accidents. Coverage is guarantee issue. The plan is portable. No pre-existing exclusions. So if you've had any treatments before, doesn't matter. When this policy goes into effect, it's going to pay. Group critical illness, again, guarantee issue. No questions asked. If you have a specified disease that's covered under this plan that you get diagnosed with, they're going to write you a check for $10,000. Okay, so that'll help you with your expenses as you go through that. And again, this plan's portable. Allstate group cancer policy. If you get diagnosed with cancer, initial diagnosis, you get a $3,000 benefit. Hospital confinement's $200 a day. And again, you can just see how it pays out. Once you get diagnosed with cancer, the premium's immediately waived. The cancer and the critical illness have a $50 wellness benefit. So if you go in and have your wellness visit done, which everybody should do annually, you get a $50 check back from the carrier. Group indemnity medical plan. If you know that you're going to have a surgery in 2016, okay, on an inpatient basis, you choose the low option plan. It's $1,100 for an inpatient stay. High option plan is $2,200. If you know that you have an upcoming surgery in 2016, you should really consider buying this plan because they're going to write you a check for $1,100 or $2,200. And the premium on all of these products are very, very inexpensive. Hospital intensive care, you get $100 a day, $200 a day on the high plan, and then the hospital confinement, same thing. So here's the cost. I know you have your handouts. Hopefully everyone can see this. This is exactly what the contributions are today. So I'm just going to use the instructional deductions. Based on that premium amount, you're spending about $720 a year for the 317 plan, and that's the one we'll focus on. If you're if you're employee and spouse, you're spending $760 a month. If you're employee and children, you're spending about what's that, $390, and then family you're spending $1,300. Just rounding the numbers, right? Pretty stout premiums to spend. Now here's where you're going to have to start, looking at what plan is best for you. The HSA plan, you can see, again, sticking with instructional, you have zero cost for the employee only. For the employee and spouse is $190.77, so that's $380. Remember what we're spending over here, $387. So that's significant savings there. That's about what, $400, about $4,800 a year you're going to save on employee and spouse. You see where the HSA plan could make sense for folks? I mean, that's $4,800 if you're employee and spouse that you're not sending to Blue Cross Blue Shield of Florida, that you are taking and you're putting into a health savings account to pay for your medical expenses. So if you have expenses less than $4,800 last year in your medical care, you need to consider this plan for you and your spouse. Anyone cover family in here? Spouse and children. No spouse and children coverage in here. If you were to do that, look at this is even this is $1,300, right? Is what you would spend under your current plan. Under the new plan, $348, $700, $600 a month, $7,200 a year you save in premium if this is the right plan. So again, it's not for everyone, but it's definitely something that you need to consider. And the best way to do it is get on My Blue Service, print off what your medical expenses were for this year for you and your family, back the premium into it, and then see how it comes out. And if you come out ahead, take advantage of this plan. Oh, I'm sorry, this is the dental premiums. High options, $13.72 a pay period. I think right now, is anybody, it's right around $11, $12. It's not that much. For the additional benefits that we were able to negotiate, I think the slight increase is well worth it. And then you can see it across the board there. Families, $36.62, $23.68 for employee children, $23.77 for employee and spouse. And then the low option plan. Vision, no plan changes, no rate changes. That stays the same. Those are monthly rates. Life insurance, you can see that we've got a little better life rate than we had in the past. So this is life and AD&D coverage, $50,000. Doesn't matter how old you are, it's $17.50. Now again, if you're not enrolled in the optional life today, you can get guarantee issue up to $10K. Anybody that has life insurance, you just get an additional $10,000 if you want it. If you want to cover your spouse, they can get up to $20,000, $5.60. But again, they can only have 50% of what you have. They can't exceed that. So if you have $50,000 already in place, now this is on optional life only. You cannot use what the employer pays. Okay, so you don't add those two together. Because I know you had mentioned combining them. You can't add them together to get your spouse the 50% number. It's what you have on optional life that they can get 50% of. $10,000, $2.80, doesn't matter how many kids you have. You have 1 kid or 10 kids, everybody gets $10,000 for $2.80. Pretty good deal. Okay, disability insurance. This is just an example, but this is how the rates work. If you do a 90-day waiting period, it's going to be more expensive because they're going to begin paying faster. So on a 90-day waiting period, if you make $30,000 a year, it's going to cost you $13.93 a month to have long-term disability insurance. If you want to do the 180-day waiting period, it would be $10.75. Doesn't matter what your age is, composite rate. So you can see it's pretty inexpensive to protect your income. Open enrollment, it's an active enrollment. Okay, so we want you to go into the system and go through and choose the plan that you want medically. If you do not choose the plan that you want, it's going to default to the plan that you're enrolled in today. Okay? You do need to go in and make an election on the dental insurance because it's new. We had a new carrier, so we need to make sure you re-enroll in that. Life insurance, MetLife's a new carrier. We want you to go in and re-enroll in that. Update your beneficiary information. It's always good to do that every year. Things change. And then you'll go in and you'll look at the voluntary long-term disability. You can either enroll or waive in that. If you are covered somewhere else and you're not enrolling in this medical plan, on the site there's going to be a section for you to waive coverage. We want to know where you're covered at. The ACA is really leaning heavily on the employer to be able to identify that employees have other coverage. You all know because of the ACA, everyone now has to have insurance, right? If you don't, you pay a penalty, and they catch you at tax time. So we need you all to go into the system and tell us where you're covered if you're not covered under the school district's plan. Open enrollment dates are going to begin November the 2nd. It'll run to the 23rd. We're using the same open enrollment platform that we've always had through Benefit Connector. So you'll go online. You can obtain the instructions through the Bay County website. It's going to be available to you 24/7 for 3 weeks. So we've got plenty of time for you all to go in there and decide what plan you want. You do have some research to do on what plan's best for you. And we have to get back with you on what the contribution will be, and I promise you we'll have that amount to you before this open enrollment period starts.